This is Matthew Cratter from Trade University, and today I want to talk about my 2021 Bitcoin price target of $200,000. Now, Bitcoin can do anything it wants, but I still think that there's a very, very, very low probability, probably close to zero, that we hit 200,000 on Bitcoin by December 31st of this year. So I want to talk about where that price target came from, how I constructed it, and also what I got wrong. This is a lot of you have been asking about this, saying, I recall you said Bitcoin is going to go to $200,000. So please explain to everyone how you could be very wrong. And then other people saying he probably won't respond to your comment. But of course, I'm happy to make this video because this was one of the central predictions made by my channel in 2021. And it was an epic fail, especially, it looks especially bad after the down move in Bitcoin over the last couple days. Now, I'll start by saying that I much rather go out on a limb and fail that rather than be one of these kinds of guys who talks out of both sides of his mouth to try to make sure that I can pretend that I was right, sort of like a talking head on TV or an economist or even a stock analyst. If you read stock analyst reports, they're often very careful to hedge against career risks, so they try to be right no matter what. And as a result, they miss out on making some bold calls that could actually make you a huge amount of money. Now, I fortunately don't have career risk here. There's no one I have to answer to except my audience, which is why I want to be completely open and honest with you. But on the other hand, I don't want to shy away from making these kind of bold predictions, especially when I have a lot of conviction behind it. I don't want to be one of those, what Harry Truman called two-handed economists. He said, give me a one-handed economist. All my economists say on the one hand, on the other hand. So that's the basic philosophy of price prediction here. I try to make the best predictions I can, and I try not to talk out of both sides of my mouth. And so there's definitely a possibility that I can be wrong. I was very wrong, for example, about Tesla. I was very bearish on it for about a year, and then I flipped bullish in May of 2020 and proceeded to make back a lot of money doing that. So I do have a history of being wrong. I also have a history of fixing the mistakes when I can. So this original price prediction of 200,000 was made on December 31st, 2020 in this video. We'll go back and review some of these other predictions to see how they've aged. But for now, I just want to focus on the prediction that Bitcoin would be at $200,000 on December 31st, 2020. Now, this $200,000 price target was not taken out of thin air. I came up with it as basically applying a conservative discount to Plan B's stock-to-flow cross-asset model. Now, he has a couple models. He has the original one modeling Bitcoin value with scarcity, and then he has this one, the Bitcoin stock-to-flow cross-asset model, which prices different assets based on their scarcity. So the idea is that at a certain scarcity or certain stock to flow level, where the stock is the existing inventory of Bitcoin that's ever been mined, and then the flow is the new Bitcoin that's being created and mined every day. Looking at this ratio, you can back into doing just a simple linear regression. You can back into a certain market cap. And each of these models does it in a slightly different way. I'm not going to go into that in this video, but we can use, once we know the market cap, we know the number of coins, and so we can obviously back into a price target for Bitcoin. Now, the stock-to-flow cross-asset model of Plan B's suggests that $288,000 would be the price average for the entire halving epoch of 2020 to 2024. I first made this video and did this $200,000 prediction when Bitcoin was trading at $28,000 on December 31st. So it's still been a fantastic return for an 11, 12-month period, but obviously we're far, far below 288,000. Now, how did I come up with that number? Using the stock-to-flow cross-asset model, Bitcoin needs to have an average price of $288,000 over the entire 4-year period. And what this means is that it would need to spend a lot of time at or above $288,000 in order to end up with this average, especially considering we started the year around $28,000, $29,000, $30,000. You need to spend a lot of time above the target as well as below it. So this would be here are two different ways that we could have fulfilled the model, and this still may happen as we will see. the market could go straight to around $288,000 and then just bounce around there. And that would be one way. If it had moved sharply up in January or near the beginning of the year and then traded around there, that would give you a well, we're actually looking at this average over the 4-year time period. So what would have to happen is you could go to $288,000 fairly early after the halving and then just bounce around there. That's one way to get the average. Obviously, there are many different ways to get an average. You could start low and then go high. So let's say this is probably too high of a number, but let's say that Bitcoin's average price in 2020 was 20,000. Let's say its average price in 2021 turns out to be 45,000. And then say the average price in 2022 is 700K, 2023, 400K. If you average these, and I'm not sure exactly the way Plan B is averaging it, whether he's using daily averages or weekly averages, but this gives you the general idea. If Bitcoin followed a path like this over the halving, you get an average price of $291,000, and the stock to flow cross asset model would still be working really well. We would say that the model was successful. So it's very important to realize that the stock to flow models have not broken, because what they're looking at is an average price over this 4-year period. And so this may still happen. Obviously, it doesn't look like we're going to get $200,000 in 2021. But my idea was if we're going to have an average price somewhere around $288,000 over the 4-year period, we really should be trading to or at around 200,000 by the end of 2021. Now, the date of year-end, December 31st, 2021, was not taken out of thin air either. Historically, it's the 18 months right after the halving that's the most bullish time. So if you want a high average price like $288,000 or $100,000 for that 4-year period, Bitcoin really needs to do most of its appreciation during these initial 18 months if it's going to follow the historical 4-year pattern. Again, Bitcoin doesn't have to follow this, but if you're looking for an average price of $288,000, you have to make up a lot of ground in that first 18 months in order to trade at that average. If we look at previous halving cycles, the 2016 halving cycle began, the halving was on June 9th, 2016. The price peak was roughly December 17th, 2017. That is 556 days, or 18 months and 8 days. So this is where I get that number of 18 months. Now, the 2013 cycle was slightly different because you got 2 peaks. But let's talk about the 2020 epoch, the 2020 halving. That halving was on May 11th, 2020. And so as of today, December 5th, it's been 573 days since the halving, roughly, or 18 months and 24 days. And so that's why I picked a year-end target, because it's about 18 months after the halving. It's a little bit more than 18 months after the halving. So this was a nice date, December 31st, 2021, to place that $200,000 target. So we can see that neither the price target nor the date were completely arbitrary. So what went wrong? We could blame a lot of different things. We could blame Elon Musk and the energy FUD and that sort of negative, no pun intended, negative energy that he brought to Bitcoin. We could talk about China banning Bitcoin, expelling the Bitcoin miners. We could talk about the fact that we ended up getting a futures-based Bitcoin ETF, but not a spot-based Bitcoin ETF, as I was fairly certain we would. And I'm actually shocked and appalled that we haven't gotten a cash BTC ETF yet. We also got the nasty infrastructure bill, which could prove problematic for cryptocurrencies in general. We'll see how that plays out. But all these things considered, all this FUD, all these problems, I hate these kind of excuses. And my philosophy here is that if Bitcoin cannot handle small things like this, I still think it's fairly small, having China kicking out the Bitcoin miners. If you can handle small things like this, it's not going to make it. And so we need to talk about something else. But before I do that, just want to ask you, if you're finding this video helpful so far, to hit that subscribe and like button, maybe share it with a few friends as well. So are the stock to flow models broken, the original stock to flow model and the cross asset stock to flow model? Possibly. And the way we'll know is if we don't get $100,000 average price from 2020 to 2024, And again, I'm not sure, I'll have to look this up, whether it's measured weekly or daily or even monthly. But if we don't get that average price of $100,000, then the original stock to flow model is invalidated. If we don't get an average price of $288,000 over 2020 to 2024, the stock to flow cross asset model is invalidated and has broken. And models, of course, break. There's no idea that there's nothing that makes these models have to continue working. Basically, as Plan B likes to say, I can't remember who he's quoting, all models are something like all models are false, but they can be useful. So if stock to flow cross asset model is going to hold, we are going to see much, much higher prices next year in order to get to this $288,000 average price. And again, one way we can do that is just to spend a lot of time around there, or we could go much higher. We could go up to 400,000, up to 500, 600, 700,000 in order to make up for all the time we've spent below $288,000. Of course, there's another possibility. The models could break, the models could fail and be invalidated, and Bitcoin could still follow a path where it makes it into the millions over the next decade. Maybe it does a lot of that appreciation after 2024. We should say that when you publish a model or trading strategy, this is traditionally what happens. This is why people have this hypothesis that markets are fairly efficient, because when you publish a trading strategy or model, the market works to frustrate you. And Bitcoin is a very tricky market indeed. So it would make sense if we're not able to capture it in an equation. This might be happening with stock to flow. So Bitcoin could still succeed, and I still believe that it will massively succeed. And that would be one possibility where the stock to flow models fail, but Bitcoin still succeeds. The other possibility is the much darker possibility that the stock to flow models fail and Bitcoin's price sort of permanently stagnates as well. If that happens, that's going to be a big problem, because one of Bitcoin's best forms of free marketing is number go up, NGU technology, as people like to joke. And it's really, this is how people often hear about Bitcoin. They hear about it at the Thanksgiving table when the nephew or uncle talks about how much money they're making in Bitcoin. At least it's traditionally been in Bitcoin. There's been this altcoin distraction, which I'll talk about as well. But NGU is not just important for this free marketing and getting the word out and increasing Bitcoin adoption and bringing new people into the space, new investors into the space. It's also very important for the security of the network, especially because we are moving slowly toward a transaction fee-based network over time as the halvings continue and the miner subsidy trends toward zero. And so it's very important. The higher the price of Bitcoin, the higher the hash rate and the higher security. So it is important that Bitcoin's price keeps moving up. If you want to get a better feel for these models, I'd encourage you to read both of Plan B's papers here. They're quite well written and quite interesting. I think he has a third paper as well, but these are the two main models you can read about, and you can see his price targets in there as well. Plan B backs up what I'm saying here, saying, as you know, the stock to flow model predicts 100K average for this halving period. The stock to flow cross asset model predicts 288K average this cycle. Parenthesis, we need some real fireworks in 2022 for that. Let's see where the second leg of the bull market will take us. If you want to follow along with stock to flow and the chart, this is a really useful website, stocktoflow.hamal.nl. And I'll link to this below. You can scroll down. I've showed you guys this before, but it's a good reminder that this is here. You can scroll down and click on either of these charts. And when you do that, you'll be taken to a blown up version. These are usually updated daily. So these are based on the original stock to flow model. And we can see that during the 4-year cycle, Bitcoin does sort of a blow off top near the beginning of it. Again, 2013 was sort of a strange one where you had a blow off top in 2013 and 2014. And what's important to notice is that these end up going to standard deviations above the line. So the model, this black line in the middle here that I'm drawing with red, is the model price. And then you have basically two standard deviations up and 2 standard deviations down. The first standard deviation is this darker blue, and then there's a really lighter blue color here as well. And what we've seen in the past is the cycle, the 4-year cycle, the bullish part of the cycle doesn't end until you get this blow off top, which we had in December of 2017, as we talked about 18 months after the halving. So that's one thing that's been strange about this. We've been sort of spending a lot more time below the model line and in this blue zone. We haven't yet had the blow off top, which leads me to think that this cycle is going to be more elongated and that it's not over until we trade somewhere above here at the light blue, just as we've done at previous climaxes in previous cycles. You can click on the second chart down here, the 2-year detail chart. That will take you to this blown up chart. And again, the middle line here is the model price. You have 1 and 2 standard deviations out. And we can see that the second standard deviation out, where we should be hitting if we get a blow off top, is at roughly $250,000. And it actually goes a little bit above that. So it's probably closer to $300,000 here. I think we're looking at a logarithmic chart. That's why it looks a little bit weird in the x-axis. That being said, we can see that this has been a fairly weak cycle in 2021. Spent so much time here below the line and even 2 standard deviations down. This was, of course, the Elon Musk energy FUD and the China problem. And this has definitely been a weaker cycle as a result of that. And you would expect to spend a lot more time above the model price, at least in the form of a blow off top. So the Bitcoin cycle, it may be weaker and longer this time around, or just maybe weak and short. I certainly hope that doesn't happen. I don't think that's going to happen, but of course it's a possibility. Maybe stock to flow breaks down simply because these halvings won't matter as much anymore, since the miner subsidy is getting so small and it's shrinking after every halving, obviously. And so adding 6.25 Bitcoin every 10 minutes, it's not a huge amount of flow coming into the market. So this is an ongoing debate. There's the lag effect as well. And we saw that with the stock to flow chart. We can also see it here where we have the different cycles. We have the 2012, the 2016, and the 2020 halving all modeled here based on a starting price. They're all adjusted, so you start at the halving. So the 2012 to 2016 cycle was this light blue line. The next one, the 2016 to 2020 cycle, was this blue line, and we are currently in the red line, about 18 months after the halving. So we were originally tracking between the 2 previous cycles, and now we've fallen below. But there does seem to be a lag effect as well, where the new cycle is a little bit lower, but the peak happens later. So that initial peak from the first cycle after the first real halving happened 12 months after the halving. Again, as we said, the peak of the 2016 cycle happened about 18 months. And so we could see a situation here where this continues, and maybe we get a lower peak, or maybe we get a higher peak. It's hard to tell, but it's somehow that peak is in the first half of next year. And this would continue the process of the price appreciation of the first half of the halving being a little more lagged and a little lower. Maybe it's maybe we're not allowed to cross above this blue line, so the peak will be somewhere closer to $100,000 instead. Only time will tell. I personally don't think that this bullish cycle is over until we get that parabolic melt up like we got in 2017. And if we're going to get it, it's really most likely that it happens in 2022. But again, only time will tell with this one. Meanwhile, a very important reminder, and I try to cover this just as much as I cover price targets on my channel. I believe Bitcoin is our only hope at this point. We're entering a great reset. We're at the end of the long-term debt cycle. The last couple of years have been weird, if you might have noticed, and we have only one chance to free ourselves from central bankers. They're very small windows of opportunity here at the end of these giant debt cycles, and there's a reset that's happening. There's too much debt, there's too much leverage, and so the powers that be are trying to work us through this reset. And so far, it has not been a very pleasant experience. I think Bitcoin is one way to stop these people. It's one way to stop the central bankers. It's one way to bring about a new, much more free and fair and advanced civilization where we're not dependent on the money printers and we don't have all these cantillionaires who don't produce anything of value but just stand really close to the money printers. Bitcoin is our only hope when it comes to this. There's no other protocol. There's no other protocol that's as decentralized, as robust, as anti-fragile, that doesn't have a visible leader that you can coerce or apply pressure to. So this is a very, very important point in history. We should all be focused on Bitcoin because it has this hope. This is the CryptoPunk hope, and it's also the hope of ordinary men and women who just don't want to have their money controlled and debased. They don't want to be told whom they can pay and whom they cannot, and they don't want to have their money debased when it's sitting in their bank account or have it, heaven forbid, frozen. So we have this one chance right now as we enter the Great Reset to do something, and Bitcoin is the only way to do it because it's this decentralized protocol. Instead, I'm very frustrated what people are focused on. They're focused on dog coins. They're focused on other garbage like this. Centralized VC-backed tokens like Solana are not going to save us. They're going to make the VCs a lot of money as they dump them on you. And you can watch my video I made about this, about Solana. Also, a coin that's moving to proof of stake, whose monetary policy is decided by Cat Purse Boy and his friends. Here's Cat Purse Boy, is not going to save us. Ethereum is moving towards a proof of stake system, very easy to capture, very easy to manipulate, and this will not save us. We don't want to replace a proof of stake system, which we have now, with another proof of stake system that is controlled by a few wealthy oligarchs. Bitcoin is our only hope. Bitcoin is the apex predator that eats all of these currencies. This is the hypothesis, and I think it will continue to be true. If Bitcoin fails for some exogenous reason, so be it. But I do think that this is our best hope, and the best way we can bring this about. You always ask me what can we do about these problems. I think the best thing is really you can buy Bitcoin and you can tell other people about it. You can warn other people about the privacy violations, the control that is coming down the pike as well. I think those things are all helpful. And you can also warn them away from altcoins, which are a huge distraction at this point in history. And I think you could even view them as a way that the system tries to distract us from the real goal. Because if everyone's focused on their Shiba Inu coin and their Dogecoin, the central bankers and the other people in control, they don't have to worry about anything because they have a cowed populace that's not too intelligent, that's wasting their time and energy and the fruit of their time and energy, which is their money, on dog coins at this central pivot point in history. So stay focused on Bitcoin, keep learning about it. If you don't understand Bitcoin yet and you don't understand the difference between altcoins and Bitcoins, or even the difference between Bitcoin and fiat money, I see a lot of people in my comments saying that because I don't hold gold and I hold Bitcoin, Bitcoin is just another form of fiat money, which nothing could be further from the truth. So make sure you check out my other videos if you want to learn more about Bitcoin. I also put a link in the description notes below if you want to my Bitcoin book, which you can get from Amazon for just $2.99. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.